If you are collecting Social Security right now and you are still working, even part-time, even just a few hours a week, you need to stop what you are doing and watch this entire video. Because the Social Security Administration has a rule buried inside their system that is quietly reducing the monthly checks of millions of retirees right now, and almost nobody knows it exists. We are talking about a legal government mechanism that is already active on your account, already calculating your income, and already making decisions about how much of your own money you get to keep. And the agency is not calling you to warn you, they are not sending you a letter, they are not going to walk you through it at the field office unless you already know exactly what to ask. That is why this channel exists. Because the information that protects your check is out there, it is documented in federal policy, it is real and verifiable, but it is buried so deep inside SSA language that most people never find it until after the damage is already done. And I need you to understand something before we go any further. What I am about to share with you is not theoretical. This is not speculation. These are the actual $2,026 thresholds, the actual form numbers, and the actual recalculation process that the Social Security Administration uses right now. And before this video is over, I am going to show you the most powerful part of this entire system, the piece that SSA almost never volunteers, the part that changes everything about how you think about working while collecting benefits, and I am saving that reveal for the end because it is that important. So stay with me all the way through. If you leave early, you are leaving money on the table. Let us start with the foundational rule that is already affecting your account if you claimed Social Security before your full retirement age and you have any earned income at all. It is called the Retirement Earnings Test, and it operates completely automatically inside the SSA system. There is no opt-in, there is no form you sign to activate it. It just runs on your account the moment you are collecting benefits early and earning a paycheck. Here is exactly how it works in 2026, and you need to write these numbers down. If you are under your full retirement age for the entire year of 2026, the Social Security Administration allows you to earn up to $24,480 per year before they touch your check. That works out to $2,040 per month. If your earned income stays at or below that level, your benefit continues as normal. No disruption, no reduction. But the moment your earnings go above that $24,480 threshold, SSA begins withholding $1 from your benefit for every $2 you earn above that line. Let that sink in. Every single dollar you earn above that limit costs you 50 cents in Social Security benefits. If you are working part-time thinking you are supplementing your retirement income and you go even slightly over that threshold, you are paying a penalty you may not even realize is happening. And here is where it gets more dangerous. SSA does not always catch excess earnings in real time. What typically happens is that the agency reconciles your reported income after the tax year closes, which means they can come back and demand repayment of benefits they determine were overpaid because your earnings exceeded the limit. We are talking about potential overpayment notices arriving months after the fact, demanding you send back hundreds or even thousands of dollars. That kind of financial shock has derailed retirement budgets for people all across this country, and most of them had no idea the earnings test existed until that notice showed up in their mailbox. Now, there is a second threshold that applies in the year you actually reach your full retirement age, and the rules are significantly different. If you are turning your full retirement age sometime during 2026, the earnings limit for the months before your birthday rises sharply to $65,160 for the year. The withholding rate also drops to $1 withheld for every $3 earned above that higher limit, and it only applies to earnings from January through the month before your full retirement age birthday. Once you hit that birthday, the earnings test disappears from your account entirely. Gone. No limit. No withholding. You can earn $100,000, $500,000, any amount you want, and your Social Security check will not be reduced by a single cent. That is a critical date that every working beneficiary should have circled in red on their calendar. Now let us talk about your earnings record, because this is where the second major threat lives, and this one affects people who are not even thinking about the earnings test because they are already past their full retirement age. Buried inside your Social Security account is a lifetime ledger of every dollar of wages and self-employment income ever reported to the SSA on your behalf. That record is the foundation of your entire benefit calculation. SSA used your highest 35 years of indexed earnings to calculate your primary insurance amount, which is the base number your monthly check is built on. If that ledger has even a single year with a missing entry, an underreported wage, an employer who never correctly filed your W-2, a clerical error that mismatched your name to your Social Security number, then your benefit was calculated using corrupted data and you may be receiving less than you are legally entitled to every single month. According to a 2023 audit by the SSA's Office of the Inspector General, the agency's earnings suspense file holds more than $1.9 trillion in unmatched wages dating back to 1937. Roughly 8.5 million wage items are added to that suspense file every single year because SSA cannot match them to an individual worker's account. That is money that belongs to real people. Money that is sitting in government limbo, money that is not being factored into their benefit calculations, and for most of those people, they have no idea. If any of those unmatched wages belong to you, your monthly benefit is being calculated wrong every single month. You are being underpaid right now, and the SSA is not going to reach out to fix it. That is on you to catch and correct. The way you check your earnings record is through your My Social Security account at ssa.gov. If you do not have one, creating it is the single most important financial action you can take today. Once you are logged in, you can pull up your complete earnings history, year by year, going back to the first dollar you ever earned under your Social Security number. Your job is to go through that history and compare each year against your own records, your old W-2S, your tax returns, your pay stubs, any documentation you kept from your working years. If you find a year where SSA's number is lower than what you actually earned, or a year that shows 0 when you know you worked, that discrepancy is costing you money right now, and it will cost you money for the rest of your life unless you act. When you find an error, the form you need is Form SSA-7008. That is the official Request for Correction of Earnings Record, and you can download it directly from ssa.gov. You complete the form by listing each year where you believe the record is incorrect, and you attach documentation proving what your actual earnings were. W-2S are the strongest evidence. Signed and filed tax returns are also accepted. Pay stubs, bank deposit statements, any record that establishes your real income for that year. You mail the completed form along with copies of your documentation to your local SSA field office. Do not send originals. Send copies only and keep a full set of everything you submit for your own records. Here is the time limit that makes this urgent. Under Section 205C of the Social Security Act, you generally have 3 years, 3 months, and 15 days from the end of a taxable year to correct a wage discrepancy. After that window closes, the record becomes legally conclusive, meaning SSA treats the incorrect number as final and there are only a narrow set of exceptions that can reopen it. Things like documented fraud, mechanical SSA error, or a situation where an employer's report existed but was never posted to your account. If you are past that window on any year and none of those exceptions apply, that correction opportunity is gone permanently. That is a deadline with real consequences. And now I want to give you the most important thing in this entire video, the piece I have been building toward, the part that SSA almost never puts in plain language even when they are sitting across from you at the field office. Are you still with me? Good, because this changes everything. If you are someone who has already been subject to the earnings test, if the SSA has already withheld benefits from your monthly check because your wages exceeded the threshold, you may believe that money is gone. You may have written it off. You may have adjusted your lifestyle around the reduced payment and accepted it as permanent. I am telling you right now that in most cases that money is not gone, it is not lost, it is coming back to you, and it is coming back in a form that is even more valuable than a one-time check. Here is what happens. When you reach your full retirement age, SSA performs an automatic recalculation of your monthly benefit. During that recalculation, the agency credits you for every month during which your benefits were fully or partially withheld under the earnings test. Specifically, SSA recalculates your benefit as though you had claimed Social Security later than you actually did, effectively walking back a portion of the early filing reduction that was applied for each month where your check was withheld. The result is a permanent increase to your monthly benefit, effective from the month you hit your full retirement age, that continues for the rest of your life. This is not a temporary adjustment. It is not a one-time payment. It is a real, ongoing, monthly increase that compounds across every year you continue receiving benefits. For people who had substantial withholding over multiple years before reaching full retirement age, this recalculation can be meaningful money showing up in every single check for the next 20 or 25 years. And the vast majority of beneficiaries who went through the earnings test withholding process never knew this recalculation was going to happen. They suffered through reduced checks, worried about their finances, maybe even went back to work or made major life decisions they would not have made if they had understood the full picture. The SSA processes this recalculation automatically. You do not file a separate form to trigger it. But here is where you have to be vigilant. Because the increase is applied as a permanent adjustment to your ongoing monthly check rather than arriving as a lump sum, it is easy to miss. If you are not monitoring your benefit statements and comparing your post-FRA payment against what you were receiving before, you may not even notice the adjustment occurred. And if SSA made an error in the recalculation, or if they failed to apply it properly, you would have no way of knowing unless you were watching. That is why your My Social Security portal is not a one-time setup. It is a tool you should be checking regularly so that you know exactly what your benefit should be and exactly what you are actually receiving. Here is your action plan. Step 1, go to ssa.gov today and log into your My Social Security account or create one if you do not have it yet. Step 2, pull up your full earnings history and review every year against your personal records. If you find any discrepancy, download Form SSA-7008 from the Forms section of ssa.gov and file it with documentation as soon as possible before any correction windows expire. Step 3. If you are currently collecting benefits before your full retirement age and you have any earned income, confirm where your annual earnings stand relative to the 2026 threshold of $24,480. If you are close to or above that number, you need to understand exactly how the withholding formula will affect your checks for the rest of this year so you are not blindsided by a reconciliation notice later. Step 4. If you have already had benefits withheld under the earnings test and you have reached or are approaching your full retirement age, watch your monthly payment closely around the time of your birthday and in the months immediately following. That is when the automatic recalculation should appear as an increase in your check. If it does not appear, contact SSA directly and ask them to walk you through the benefit recomputation for your account. You are entitled to that recalculation. Do not let it fall through the cracks. This is exactly the kind of information that the government makes technically available, but never makes easy to find. It lives in policy documents, buried in actuarial tables, scattered across federal publications that most people will never read. That is why this channel exists. If this video helped you understand something about your Social Security benefits that you did not know before, subscribe right now because we are tracking every rule change, every threshold adjustment, and every strategy that affects your monthly check. Hit that subscribe button and then share this video with every retiree you know who is still working, because if they are collecting Social Security and earning income and they do not know about the earnings test, they may already be heading toward a financial shock they do not see coming. Share this now. Someone you care about needs to see it before it is too late. Sonnet 4.6